But as I've always said, the only reason why the Japanese market is up so strongly in the last 2 years is because the Japanese yen has been very, very weak. Once it reverses, you got to get out, right? And I think they're all getting out right now as a result of that. So an indication of whether the Japanese stock market is going to do well or not is just looking at the yen. And today you have the yen falling down to what? Appreciating to 146, which basically means that there is still a lot more pressure on the Japanese stock market, unfortunately.
Okay.
And don't forget that the Japanese government bonds are a safe haven currency. So with what's happening last Friday, you get a bit of the risk aversion going on, right? You have gold prices going up, you have US Treasury yields coming off, and of course the Japanese yen appreciating. That in turn is actually feeding into the market at the moment. So it's basically a lot of bad news coming in at the same time.
Big Japanese financials, the banks, the insurers, etc. What are they likely to be doing or thinking?
I think the main thing that they're thinking right now is how high can how low can the US Treasury yields go? Because if the Japanese Treasury yields go a lot lower, then they have to basically change their thinking about investing overseas, right? And you have a lot of Japanese investing overseas as well at the start of the year because of the NISA account restructuring.
Yep.
Again, there's some thoughts about that, selling our stocks there and bringing our Japanese yen back as well. That in turn is going to fuel to the Japanese yen rally.
All right, so the nut graph, or the key question here is, when we first started with you were saying, look, the unwind of this massive yen carry that's been so successful and so profitable for so many people for so long, that's starting to unwind, right? When does it stop, and what sort of levels should we be watching to give us a signal or a tell that it is going to stop? Let's start with dollar yen.
Yeah, I think it's hard to put a finger as to what level it would probably get to, but I think if you should be looking at about 143 at least for the time being.
Yeah.
And if again the Japanese life insurance companies and the pension funds get into the act of repatriating the yen back, then obviously there's a lot more room for the yen to strengthen to about 135. Okay. But I think for the time being, 143 is where I think the yen's probably going to hit.
And what about the US 10-year?
The US 10-year yields, our forecast is for it to actually hit 3.5% by the end of the year. But if the Federal Reserve cuts by 50 basis points in September, then obviously there's pressure for the yields to actually go below 3.5%. Because I think if they cut by 50 basis points in September and there is some panic with regards to the economy, they might actually cut by another 25 to 50 before the year is out, right? So if that's the case, then obviously the 10-year yields have more room to actually fall in that sense.
Wow.
It's remarkable, isn't it, when you look at the price action this time in July, we had the Nikkei over 42,000. In the space of a month, we are, 35,000 plus. Is it a buying opportunity? When you consider that the corporate governance story arguably still remains intact?
I never bought into that. No, I never bought into that. I think if you're going in right now, you're trying to catch a falling knife, actually.
Right.
The only reason why the Japanese market went up so much to 42,000 points was largely because of the weak yen. Okay, fine, there is some Japanese corporate restructuring, the price-to-book valuations looking better, etc., but the main driver was the Japanese yen. Right, so
and
the yen
changing.
Exactly, that's changing, right? So yes, it might find a level, but at this point in time, the Japanese stock market is still not attractive enough for me to actually want to go into.